Today, cash and coins are often used as money since they're easy to carry around, physically durable, and hard to counterfeit. But a lot of money today doesn't end up in anyone's pocket or wallet, or duffel bags, or even wheelbarrows. It moves around electronically. Increasingly, people get paid in the form of checks or direct deposits into their bank. A lot of our money isn't physical, it's digital. It exists on some bank's computer. And as long as that computer is secure and the zombie apocalypse doesn't permanently knock out the power and your nation's monetary system is functioning as it should, those electronic dollars do all the things they're supposed to do. Another form of digital money that you often hear about is Bitcoin. Bitcoin is a virtual currency that is not issued or regulated by a specific country. But since some people accept it as payment, many economists consider it money. Unlike other electronic currency, Bitcoin doesn't involve a bank, so people can, in theory, buy things more anonymously. This appeals to people who don't trust central banks, and also people who want to buy illegal stuff online. That illegal trade means law enforcement and regulators are also very interested in Bitcoin. Bitcoin isn't only for internet drug deals, though. There's a lot of speculation in Bitcoin, meaning people buy up Bitcoins hoping to turn a profit on them. This makes Bitcoin more of a speculative asset and limits its use in buying and selling actual goods and services. Could Bitcoin or another virtual currency be how everyone pays for things in the future? Who knows? But if anyone wants to give me 10 Bitcoin for this zucchini, we've got a deal.
There's kind of a glaring question here.